Hello everyone and welcome back. Today's video is part of our TWS tutorial playlist, and we're going to look at the different order types available on this powerful platform. Here's a quick overview of the topics we're going to cover. Let's start with the basic orders. The most fundamental type of order is the market order. It simply tells interactive brokers to buy or sell an asset right now at the best available price. The main advantage of this order type is that execution is guaranteed. You can be sure you'll enter or exit the market. However, the price is not guaranteed and may be worse than expected, especially in markets with low liquidity. Let's take a look at a real example on live markets. All right, so let's say we want to buy NVIDIA using a market order. We just click this button right here. Then we choose the quantity. Let's say 1,000 shares. And you can see the equivalent amount in USD right below. Here you've got the bid, and here the ask. Now just click Submit to send the order. You'll get a quick confirmation window, and once you transmit it to interactive brokers, it gets filled instantly, since it's a market order. If we look at the portfolio window, we can now see our 1,000 NVIDIA shares position, and right here, our P and L. In the activity window, the order appears, and we can see it was executed at 187.99. Now, if we want to close this trade using a market order, it's super simple. We just do the opposite. Click Sell, select your current position, choose Market Order, and transmit it. It's filled right away, and your position goes back to zero. I've lost about $10 because of the trading fees. If we check the Orders tab, we can see both market orders, one for the buy and one for the sell. And in the Trade tab, we get all the exchanges used to get the best possible price for the buy and the sell. And on the Summary page, we have a clear overview of what happened, including the realized P&L. Now let's move on to the limit order. A limit order allows you to buy or sell an asset at a specific price or better. For example, for buy side, you set a price limit and you won't buy above this limit. The advantage here is that you have full control over the price, but the downside is that execution isn't guaranteed. Your order may never be filled if the limit price isn't reached. Let's go back to TWS. Now let's try buying Euro USD with a limit order. We have to enter our limit price, which is basically the maximum price we're willing to pay for the pair. After submitting the order, we can see it's not filled yet, because the current price is still higher than our limit. So we'll have to wait for the market to reach this green line. That's our maximum price. Our order is displayed right here, and we can also click View, and then tick the Chart Trader tool. A small gray area pops up right here showing our orders directly on the chart with key info. Here's our limit line, and as you can see, it's still pending. Now the market's moving higher, so let's move our limit a bit above the current price. As soon as I release the button, the order gets filled instantly, since our limit was above the market price. The green area shows our fill price. Now let's move on to another essential order type, the stop order. It's designed to buy or sell an asset only when the stop price is reached. Once that happens, the order is executed as a market order. As for the pros, it's a great tool for setting stop losses and protecting your capital. However, one of the main drawbacks is the potential slippage that can occur after the stop price is reached, since the order becomes a market order. Now, let's simulate a buy stop order. I have to set the stop price, let's say 1.1607, on this box, and then hit Submit. You can see the order being transmitted, and this green line represents my stop level. We can see all the details here. Now we just wait for the price to hit that stop. Let's lower it a bit. And there it goes. It's been executed. But if you look closely, my fill price is higher than my stop price. That's because once the stop is triggered, it becomes a market order, and I'm not protected from slippage, meaning the small gap between the stop and the execution price. That's exactly why stop limit orders exist, to avoid this unexpected gap. So, the stop limit order works the same way as a stop order, But instead of turning into a market order when triggered, it becomes a limit order. This gives you more control over the price after the trigger, but execution is not guaranteed because of the limit price. Let's simulate this order. We are going to sell Euro USD using a stop limit order. Here we've got two fields, one for the limit price and one for the stop price. Let's say we want to short if the price crosses 1.16018, and we'll set the limit at 1.16011. I submit the order, and you can see the stop line right here. The order just got filled and my execution price is 1.16015, which is even better than my limit price. That's the advantage of a stop limit. You keep control over your entry price, which is super important, especially when you're dealing with large orders. Now let's talk about one of the smartest order types you can use on interactive brokers, the bracket order. It allows you to place 3 linked orders at once: your main order to open the position, a take-profit limit order, and a stop-loss order. These 2 exit orders are OCO, which means one cancels the other. It's a great tool for automatic risk management, as it lets you define both your profit target and your maximum loss in advance. However, it's not ideal for scaling in or out, meaning entering a position step by step or taking partial profits progressively. Alright, let's try a bracket order. Let's say I want to buy with a stop order, so I enter my stop price and then click on the Advanced button. Here, I can attach a stop loss and a profit taker, and that's what we call a bracket order. I tick this option, set my take profit limit price and my stop loss. Then click Submit. Now, all 3 orders are sent at the same time. You can see my stop price has just been hit, so I'm now in the trade. Here's my stop loss level, and up here is my take profit. Both orders are active and just waiting to be triggered, as we can see here. You can also see them listed right here. And if you want to adjust your stop or take profit, you can simply drag them directly on the chart. Let's see which one gets hit first. Okay, it's the stop loss. And right away, you can see that my profit taker gets automatically cancelled. Alright, now we're going to study trailing orders. A trailing order is very useful because it works like a dynamic stop market order. You set a distance, either a price amount or a percentage, and if the market moves in your favor, your stop follows the price at the set distance. On the other hand, if the market moves against you, your stop stays fixed. This way, it helps protect your capital without limiting your profits. However, since the order is executed as a market order, there's still a possibility of slippage. Let us return to TWS. Here we can see I've opened a position on the pound-yen pair. My entry was right here, and now I'm going to set an exit order using a trailing order. Here, you can choose an initial stop price. For example, if you want to start the trailing stop closer than the default trail distance. But I won't use that for now. What really matters is the distance between the current price and your trailing stop. Personally, I prefer to set a fixed amount instead of a percentage. So I'll go with 12 pips, which is 0.12. Let's switch to the 1-minute chart for a better view, and now I'll submit the order. Okay, it appears on the chart right here. The initial trailing stop is set at 204.018, and as the price moves up, the stop follows it automatically. But when the price drops, the stop doesn't move. It stays in place. Let's see what happens. My trailing stop has now moved up to 204.285. And the order gets executed as a market order. The filled price is shown right here. The trailing limit order works the same way as the trailing order, but when the stop is triggered, it's executed as a limit order instead of a market order. The advantage is the same. It protects your capital while allowing profits to run. But execution is not guaranteed because of the limit price. To illustrate this order, I have opened a huge position, 10 million USD yen. And for this one, I want to keep control over my exit price. That's why I'll use a trailing limit order. There are a few fields to fill out. The first one is the limit offset. Since you don't know exactly where your trail will be triggered, you set an offset value. I'll enter 0.8 pips, meaning I don't want to sell if the price is lower than that. Then, for the initial stop price, I'll set 152.90. And for the distance, I'll use 10 pips, or 0.10. Let's check the inputs and send the order. Here it is. My trailing limit order appears on the chart. Now the price is moving in our favor. So I'll tighten the distance to 5 pips. And here we go. The order gets triggered. We can see the filled price at 153.040, since our limit order was 153.045 minus the 0.8 pip offset. So our final limit price was 152.965. This type of order is really useful when you're managing large trades. It helps you stay in control of your price while still securing your profits automatically. Alright, now let's move on to some advanced order types. The first one we are going to see is the relative order. This one's super useful because it automatically pegs your order to the best bid or ask, and keeps adjusting as the market moves. For example, let's say you want to buy at the best bid, but that bid suddenly moves higher. Instead of staying behind like a normal limit order, your buy order automatically follows the new best bid. That means you're always competitive in the order book. But it might lag a little bit in fast markets. Let's try this out directly on TWS. I'm going to short Apple using a relative order. Here, I can choose my limit or select market if I want execution in all cases. Let's set a limit at 253, and down here, we can define the offset. Basically how much more competitive we want our order to be compared to the best ask. I'll set it 1 cent lower than the best ask. So my order stays right at the top of the book. Once the parameters are set, I submit the order. And there we go. The trade is filled at 253.51, which is actually a bit better than our limit price. Next, we've got the adaptive algo order. This one automatically adjusts the timing and the price of your order to achieve a better average execution. Basically, it tries to get you the best possible fill. Let's take an example for the buy side. It starts by submitting part of your order near the best bid. Then it watches how the market reacts, and based on that, it gradually adjusts your price and the pace of execution. If the price starts dropping, it slows down and waits for a better level. So overall, it gives you a better fill than a regular market order, but a slight delay can occur in fast-moving markets. Okay, let's say I want to buy Microsoft using the adaptive algo. I can either use a limit or a market version. Here, I'll choose market. So I'm basically asking the algorithm to execute right now, but at the best possible average price. I submit it, and the order goes through. Now let's place the same buy order for Microsoft, but this time using a regular market order and compare the two. When we check the fill prices, you can see the adaptive algo got a slightly better execution, around 3 cents per share. So, the algo executes with the best possible price. And finally, we have the accumulate/distribute algo. This one's great when you're dealing with large positions. It breaks your big order into smaller pieces and executes them gradually over time. It's perfect for scaling in or out of a trade, meaning entering or exiting step by step, but it does take longer to fully fill your order. Okay, let's test the accumulate/distribute algo. Let's say I want to buy a big chunk of NVIDIA, like 6,000 shares, which is roughly $1.1 million. For something that big, It's smarter to break the order into smaller pieces, so I'll use the Accumulate Distribute tool. When I select it, I get this dedicated window. Here, I can set the size of each batch. Let's go with 2,000 shares, so the full order will be completed in 3 parts. Then I can choose how long to wait between each, let's say 20 seconds. And I'll choose to send each one as a market order. I send everything, and we can see that the first 2,000 shares have just been filled. 20 seconds later, another 2,000 get filled, and finally, the last batch completes the whole 6,000 shares. Here we can see the average fill price, and if I go to the Trades tab, we can see all the different executions listed right there. All right, now we are going to see how you can control the validity of your order through Time in Force. Time in Force basically tells interactive brokers when to cancel your order if it hasn't been filled. For example, let's say I want to buy NVIDIA with a limit order. Right here, we have a button for Time in Force. When I click on it, we get a few options. The first one is Day, which means that if your order isn't filled by the end of the trading session, it'll be automatically canceled. Then we have Good Till Cancelled, or GTC. When you submit it, that one keeps your order active indefinitely until you decide to cancel it yourself. Another option is Immediate or Cancel, or IOC. That one tells the platform to execute the order right now, and if it can't be filled instantly, the unfilled portion is canceled right away. And finally, there's Good Till Date. When you pick this one, you can click on Advanced and set a specific expiration date and time. For example, if I want my order to stay valid until next week at 4 p.m., I just enter that here. Now, when I go to submit the order, you can see that the end time is clearly shown as next week. All right, now let's talk about how useful hotkeys can be. In trading, speed matters. Every second you save when executing a trade can actually make a difference in your profits. That's why Interactive Brokers lets you create keyboard shortcuts that let you trade instantly. We call them hotkeys. For example, you can set it so that pressing B buys at the market, S sells at the market, and Ctrl+D cancels all open orders. You can fully customize these shortcuts to match your own trading habits. Hotkeys are helpful for fast execution, but there's one catch. If you misclick, you can easily make a costly error. Let's see how to set up hotkeys on TWS. First, go to File, then click on Global Configuration. Here, you'll find a section called Hotkeys, and it looks something like this. You can create shortcuts for different tools, like Book Trader, Option Trader, or Chart Trader. That's really useful, because it prevents you from executing the wrong command in the wrong window. For example, if I assign my hotkeys to Chart Trader, they'll only work there, not anywhere else. So, let's create a new one. I'll check this box to show all the available actions. You can see the shortcuts I already have, but let's make a new one together. I want to buy an asset by pressing Ctrl+B. I can customize the shortcut to buy 2,000 shares using a market order, for example. If I want, I can even attach a take profit and a stop loss right to that entry. Then I tick this box to transmit the order instantly, and that's it. The shortcut is now created. Let's do the same thing for the sell order. And if I want to close my open position, I'll set Ctrl+C for that. There's also a really nice feature under the General window. It lets you close a portion of your position, like 50%. You can see my new shortcut listed here. One important thing though, Make sure in your preset stocks or asset you want to trade, you set the primary order type to market. Otherwise, you might get an error if no limit price is defined. Alright, let's test everything. I'm on the chart trader window, and if I press Ctrl+B, I instantly buy 2,000 shares of Microsoft. You can see the order right here. And the fill price is 517.28. Now let's close half the position. I click on the General tab, press Ctrl+P, and a window pops up. I choose to close 50% of my Microsoft position with a market order. Click OK. And there we go. The order is submitted. We've got 1,000 shares left. So I'll press Ctrl+C on Chart Trader to close everything. The system detects the remaining shares automatically and executes the order right away. Alright, finally, let's see how to modify and attach orders on an existing position. So, back on TWS, you can see I've got a big short position on Aussie yen. But in this case, I didn't have time to set my stop loss or take profit when I opened the trade. So how can I easily attach them now? It's really simple. Just go to the Trades tab, right-click on the open position and select Create Target/Stop Exit Bracket. This window pops up, and I just have to fill in my limit price for the take profit. Let's say 98.25. And my stop price for the stop loss. Both orders are good till cancelled, so they'll stay active until triggered. Then I click Preview Orders and Transmit. You can now see both buy orders here and on the chart. One for the stop loss and one for the take profit. If I want to modify my take profit, I can just right-click on the line and choose Modify Order Ticket. From there, I can change the quantity or the price. For example, if I update the limit price to 98.50 and hit Transmit, the order updates right away. I can also simply drag the line directly on the chart. Much faster and more intuitive. Now, once my take profit is hit, you can see my stop loss automatically cancels, and the position closes right at my profit target. Okay guys, it's the end of the video. Thanks for joining me and see you soon for the next tutorial about mastering chart.